TSLA, and this is episode 32 of the Red Pilled Orange Pill Investor, and it's getting a little bit harder to count. I used to just be able to check the date, and one episode a day was just whatever the date is. Now it's February 1st, so that's 31 days of January plus one, and I'm going to have to actually start paying attention. So, same shit, different day really, but I guess I got my face back on the screen. Something about OBS. I was taking a window capture and I added a couple of tabs to the browser, and so it was like, okay, I'm looking for a browser that has 7 tabs open, but now I have 12 tabs open, so it got confused. And so I was just a ghostly voice the last couple episodes. And I barely pay attention. I don't have video editing software, so I don't edit these. It's just one take and go. I think there maybe have been like 1 or 2 videos that I fucked something up like a minute or 2 into the video, and I was like, all right, I can justify just shit canning this whole thing and starting over. But other than that, it's just going for it. I think somebody mentioned there's a good, I don't know if it's an AI software or something that will actually go through your video and automatically cut out dead space for you. So that might be something cool if I decide to invest in a piece of technology or something. That might be a cool thing to do. Cut all the dead space out. Might cut my videos time in half. Who knows? But yeah, it's the same thing. I had added a couple of shares of Riot, and I think it's holding pretty steady. I think MicroStrategy had gone up to like 525. Riot, right after I traded it, went up to like, let's see, I put a couple of at-the-money calls on, so that would have been 11.5. So it went above 11.5, dropped back down to 11, below 11, I think. Yeah, 1058. And now it's back up again. I was a little bit worried I was going to get hit with a margin call. Actually, I'm really close on the other account. And, but yeah, it's, the up plan is the same as the down plan. So if you're down, then, or if the stock is down, the stock is below 1250. So sometime tomorrow I will buy these calls back for a penny, and this one for sure. This one, I don't know, might be 2 cents. But times 100, so that would be just like $1. Cost me $1 to close this. I'll open up a new one for next week. There'll be a little bit of premium will drop out of this, so like at the money. Actually, this is 50 cents over at the money, but so yeah, another 3 cents will drop out of the price of this by tomorrow. But it's a $12 stock. I go up here to 1250, I can get 2% with 4% callaway value, or I could go at the, I could get actually from 1150 to here. That's more like 8% callaway value. So I can do 3% premium and 4% callaway value going with a $12 strike. Can use that money to buy more shares. I can transfer it to my bank, because as soon as I do that, it will be added to my buying power and I'll be able to withdraw it. I can use that to buy Bitcoin, since I'm calling this the orange pill orange pill investor for a reason. I'm a believer in Bitcoin. I think the cyclic nature of the halvings is about to, I think we're about to see the next bull market for about another 1.5 years after the halving. I'm basically taking Plan B's assumptions. You can search for him on X or YouTube. He's got a stock to flow model. He goes over some of the other models as well. And it's not necessarily, in my mind, whether we're going to see a bull market or not. It's kind of like what kind of a bull market. So are we going to see a bull market that goes from 10 to 58 and goes up 5x? Or, let's see, what was it, 2021? I think this one was suppressed somewhat because of COVID insanity. So, 2017. Yeah, so this one, 5x, kind of bottomed out a little bit, and then we hit 65 in 2021. So the last bull market would have gone down to, see, March in 2020 actually dropped down to 5,800. So this, basically 10x from the low to the high. But are we going to see something exponential like this, or are we going to see just a, maybe a diminishing return? I absolutely think we're going to see something. I mean, the halving means that the supply is getting cut in half, and we've got a bunch of institutional investors out there buying up Bitcoin. I saw something the other day that said the institutional buying maybe didn't have as much of an effect as was thought initially because they're buying a bunch from, is it GBTC? I don't know why the hell they'd be selling off their stuff. There was a reason, but I don't remember what it was for, what it was about. But once they run out of Bitcoin to sell, they're going to have to go out and get it on the market like the rest of us. So I have high hopes that we will be, seeing a nice bull market, and it'd be interesting to see when we start to see these all-time highs again. Once we clear, once we clear 65, I thought it would look like 67, but anyway, once we clear this, I suspect there will be some serious pumping, at least initially. But I mean, even these pumps are volatile. So 38, everybody's licking their chops. Oh, it's going to 100,000. No, still can drop 10, 20% at any time. It hit 57, dropped to 45. What is that? That's 20%. Yeah, still can drop 20%. There was a guy, Quick Fingers Luke, who would put in limit orders anytime he had, this is a terrible example, but anytime something crashes 20% below support, he'd put in his limit orders, and then for the most part it would rebound, and then he'd make a quick buck off of that, but always constantly keeping a little bit back. You know what I mean? Like if he bought one Bitcoin or one Ethereum or whatever, he would sell off half maybe for profit. So he was always, banking a little some here and there. And that's why I don't get mad at people when they take profits along the way. You can't fault anybody for taking profits anytime this pumps, even if they have to dollar cost average it back into it later at a higher price. You only know that it went to a higher price because you're over here looking back at the chart. But when you're here, when you're here, you don't know if it's going down to here or down to 20, or, you know. So I cut people some slack anytime people want to take some profits. Now, I'm not a financial advisor, so I would never give advice. However, yeah, I would probably wonder wonder what someone was thinking if they just sold it all. Like, oh, okay, it went to 46, and I'm just going to sell it all, like, you know, or at here at 37. Okay, went up from 27 to 37. That's a nice profit, 25%, 30%, and but you know, then it just goes to 44. So you don't want to sell it all. Well, I mean, maybe you do. I don't. But if you're taking profits anytime this goes up, you know, you could sell 1% here, 1% here, 1% here, 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 and then, you know, you just have these layered. Like, okay, I'll sell 1% at 35. I'll sell 1% at 40. I'll sell 1% at 45, and then those are all going to hit or not hit. And then you have 1% at 50, and that never hits. So you sold 1% at 35, 40, and 45, and then the price dropped. 10% would be to 42. So what, between 10 and 15%. You could put in, you know, once it's here and you sold 3% of your holdings, and you could put a limit purchase in for, you know, when this drops 10%, and now you got a 10% discount and you could buy some back. I don't see people say they're not smart enough to time the market or whatever. I don't really see how that's so hard. Just, you know, you put in a limit order, and when the price goes up 5-10 grand, you sell a very small portion and you take some profits. And I guess people will complain, oh, if you take profits and you have to pay taxes on it, but everybody has to make their own decisions about that. Almost nobody makes money as a day trader, but some people do it. So they literally have to make enough money to pay the taxes and live. So somebody's doing it. Most people can't. So it's if you don't have the discipline to study and be consistent, I guess don't be a day trader. But I guess that gets me back to why I do what I do. I don't try to figure out what the fair market value is of Tesla. Stephen Mark Ryan's got a nice valuation model. If you subscribe to his Patreon, you know, you can see what his valuation model is. I checked it out, and I mean, I would have to learn how to do a valuation model and then put it together, and it looks reasonable. So I don't see the for me, it's not interesting enough to bother doing that. But if that interests you, you know, figure out how to do valuation models and think about what a company should be worth. I just don't bother. I just go in here and, you know, get 100 shares of something. Try to get 1% or so call away value. You know, I might do the 195. Yeah, I'm a little depressed that Tesla is giving such small premium. However, after earnings calls, implied volatility does drop quite a bit. And so maybe this is to be expected, but I really don't think the premium was that great before earnings even, which usually the premium will ramp up some prior to earnings. I much prefer the premium that you can get on any of these Bitcoin mining stocks. Bitcoin is still pretty volatile, so I'm going to go a week out. So you're getting an extra day of premium out of this. It's 8 days. But at the money, I mean, 1% of $19 is 19 cents, which, you know, you can get 5% premium for next Friday. So that's 8 days. That only gives you 12 cents of callaway value from the 1888 to 19. So that's a little too greedy for me. Well, that's not necessarily the case. If I was buying this outright, like, okay, I'm just going to buy 100 shares of this for the first time, I don't have any shares, I would sell a very aggressive covered call because I want to reduce my cost basis as much as possible right away. So I would probably do the 19 or the 19.5. But, I mean, to get 1% premium, I mean, you can go all the way up to the 23 strike. That's $4 of callaway value. Was it like 16%? 1% is 19, actually 5. 20%. Yeah, 20% callaway value. That's definitely not greedy enough for me. That's at the 90% chance of profit. So sometimes I try to equal it out. I try to get the same amount of premium as the callaway value. So something like, let's see, going up $1 to 20 gives you about $1 of callaway value and 70 cents of premium. Not bad. But the 19.5 gives you 12.62 cents in callaway and 80. Yeah, so, you know, in here, 19.5 is a little greedy. 20 is not as quite as greedy, a little less premium, but it gives you higher potential profit if Mara spikes by next Friday. So generally these will be close to the 0.3 delta. And some videos that I've watched actually, you know, recommend just go in here and find the 0.3 delta. If you did that, you'd go for the 20.5, which would give you about $1.50 of callaway value and almost 3% premium, which, if you've seen my spreadsheet that shows, you know, if you get 3% premium, you buy 3 more shares of Mara. You do that for 33 weeks. Now you have another 100 shares of Mara. And who knows what the value of Mara is up to at that point. I mean, assuming that in general stocks go up over time, and if we are entering another bull market, then these Bitcoin stocks should pump as well. So, you know, this strategy of selling covered calls and buying shares with it and just constantly accumulating more shares, I mean, that works even if the price of Mara just stays 18.89 forever. If this just trades, you know, sideways and never goes up. Of course, if it goes down, you get hurt like everyone else who owns shares of stock. But sometimes stocks go down. So I don't see that as valid criticism. Just saying, oh, well, I'm not going to buy stocks because stocks can go down. But yeah, so this strategy works even if the stock never goes up. But if the price does go up, then you'll benefit from the callaway value as well. So I may look at kind of reallocating some Tesla money. I hate to do it because I don't think I've owned those Tesla shares for a year, so who knows if I have to. Actually, it might not even cost me anything in capital gains because my average, so actually I'd be taking a loss, about a 10% haircut on Tesla anyway, which would be fine because if I move it over to any of these Bitcoin stocks, I'll be able to collect more premium. This is kind of depressing to me. Tesla was at least giving a reasonable premium. You know, I was expecting to be able to get like 1% maybe at the 200 strike. But it's kind of annoying. We'll see. I kind of use MicroStrategy or the mining stocks as kind of a trading pair with Tesla. They're both tech stocks, so when the whole market looks good, the tech stocks go up a little bit more than the market, and when the market's taking a dump, they tend to dip more than the market as well. And you know, them's just the breaks. But of course, my other assumption is that these assets are going to go up more than they go down, just in general, but certainly over the next 18 months. But yeah, I'm really tempted to sell off some of this Tesla just to be able to move it over into some either MicroStrategy or some of these mining stocks. I don't think I have enough Tesla. You know, I don't want to sell it all off, and it is kind of nice sometimes to have like half the money in Tesla and half in Bitcoin, so that when Bitcoin takes a dump, which it does routinely do, then half my account is at least fairly stable, and I don't have to worry about margin calls as much. But it's really bothering the shit out of me to see Tesla's premium be like barely any better than Apple. Like that's kind of painful. So, but really maybe that's just me being greedy, because even Tesla, like if I wanted to get 0.5%, that's like 95. Instead of getting $1.90, if I went up here to just get 95 cents, which would be unfortunately somewhere between the 2 and the 202, that would give about 1, 2, 3, 4, 5% at the 2, 6% at the 202. And so that's the problem, is since the premium is not that great, it doesn't make sense to be very greedy with it. Like I'm not going to sell an at the money 192.5 to just get 1.5% premium here and just have like 1% call away value. That doesn't make any sense. Because the premium is so low, the money to be made with Tesla is when the price jumps. I mean, the price on Tesla can jump 5, 10, 20% at any time. So right now, on the Tesla shares that I don't sell off, I have to remember that, I'm probably going to not even, I almost always try to get at least 1%, but I think I will have to just suck it up and maybe just not even get 1% premium, but leave a nice, good 5% call away value, because I want to be able to benefit. I think there's more upside to having some good call away value right now with Tesla than it is just a pure premium play. But that's just me kind of thinking out loud and kind of planning for tomorrow. So we'll see. I generally try to keep, just based on the different prices, 2 to 3 times as much Tesla as MicroStrategy, so that they're weighted fairly evenly. But And then I just throw in some Mara, Riot, and then more recently Hut, just to kind of have some smaller amounts to play with. Like when I sell premium, if I sell a $1,000, $1,500, $2,000 worth of premium that week, I'll look and see, with $2,000, I wouldn't be able to. When Mara was 2,500, I wouldn't be able to buy 100 shares of Mara. So maybe that week I buy 100 shares of Riot or 100 shares of Hut, whatever I can buy with the premium that I made that week. And by purchasing another 100 shares, I can sell another covered call. So, and you get that's how you make 1% on 1%, not just 1% every week would be 52% a year. But when you get 1% and then you use that 1% to buy another 100 shares of something, and then you get 1% on the 100 shares that you just bought, now you got 1% of 1%, which adds up, I believe, adds up to 67% for the year. So if you just get 1% a week, it's 52% a year. That's easy math. But 1.01 raised to the 52nd power is 1%, and then 1% and 1%, 1%, times 1%. That's more like 67% for the year. So that's the point, and I think I have belabored the point more than I needed to. So that's it for now. Be good, y'all.